What's going on, guys? Welcome back to the channel. In this video here, we're going to be doing a stock analysis on Nike, and you've definitely heard of this mega fitness brand. We're going to look at this company from a value investing perspective. We're going to dig into the fundamentals, the financials, and finally determine a price to pay for this business. If you're new to the channel, my name is Leo, and my channel is guided towards everything investing. So make sure you hit that subscribe button down below, and anything listed or named or mentioned in this video will have a link in the description below. Without further ado, let's jump into Nike. So we have Nike loaded up here, and what we like to typically do first is go through the company metrics category, which I'll pull up right now. And what this allows me to see is where the company's been on average for the last 5 years and try to gauge where it's going to be going. So I like to just skim through these numbers here and try to see if we're improving on some things. So from the get-go, we're decreasing a little bit on the PE ratio, which is phenomenal. We're still a little bit high. EPS has improved over the last 5 years. ROE extremely high at 45% over the trailing 12 months, with a 5-year average of being 34%. That's amazing. Profit margin is 13% compared to 9.52%. Revenue sitting at $46 billion with a net income of $6 billion, free cash flow of $6 billion, and a 5-year average free cash flow of $3.7 billion, folks. Guys, they are crushing it so far. We pay a dividend, a small yield of 0.9%, and that is being paid out by $1.6 billion, and our 5-year free cash flow being $3.7 billion. That dividend is safe, because that's one thing to keep in mind, folks. When you're buying a company that pays out a dividend, you want to make sure that that company is able to pay it out. And with the free cash flow that we have on hand, Nike can easily do that, no problem. Return on invested capital is phenomenal, hovering around that 24% range. That's absolutely incredible, folks. Allman Z-score at 7.49 and a Piotrowski score around 8. We want this number to be between 8 and 9, 9 being the highest we can get, and 8 is a phenomenal number there, folks. The same with the Allman Z-score. We want this number over 3, and we have that. So just from skimming through this category right here with Nike, on the company metrics, there has been so far a lot of improvements over our 5-year averages, so they are heading in the right direction. Let's jump over to our financial evaluations category. Here's our list right here. We're scoring Nike 8 out of 10, and the only two places where it's going to be losing points for me is in the 5-year PE average being at 45 and share dilution at 0.91% increase. So that means they are slightly diluting us in shares. We want this number ultimately to be decreasing or staying the same. So they are slightly diluting us over the last 5 years. But honestly, folks, that is such a minuscule number. That's something I can potentially live with. And the 5-year average, it is somewhat high at 45.11. Now, granted, the only way they can justify this number is if it continues growing at this fast pace, or perceived fast pace, right? Current ratio sitting at 3. We want this to be 1.5 or higher. We have that, double that. Return on equity, we have it at 34%, which is phenomenal. We want that over 15. EPS, there's been huge EPS growth, sitting at 264%. And debt to equity, we have it at 22%. We want this number under 50%, folks, and that means that this company is leveraging their capital within the business. They're growing it through equity and not taking on debt to grow this business. So these are all positives. That means they have low debt on hand and they're building the business through equity. All great points. Our net income is growing. Our 5-year free cash flow is growing. Our revenue is growing over the last 5 years. Not a huge jump, but granted, you're looking at a $200 billion company in a fitness world where, you know, I don't know how hard it is to, I guess, grow a fitness brand, but Nike's an absolutely world-renowned name. Like everybody knows Nike, and there's so many different athletes that have put it on the map time and time again. Our 5-year return on invested capital average, folks, is 24.40%. Now, those numbers are some of the most impressive numbers I've seen. We want this number over 10%, and we have that. So far, I'm really liking Nike. It's hitting pretty much points across the board. The only point where it's going to lose points for me, honestly, is the 5-year PE average, and the share dilution is something I can deal with. I'm liking this company a lot just from a financial perspective. Now, granted, let's see if that 5-year PE average is justified while we go into a price analysis. So we're going to just go and pull out of here. We're going to go into this category where we're going to make some assumptions from a conservative, moderate, and aggressive standpoint. And if, by the way, if you're liking the video so far, make sure you hit that like button and the subscribe button for more content like this. And if you're liking this software in front of me, send me an email. My email will be in the description below. And we'll make sure we get you this software here, working on making it an app. But what we're going to do here is we're going to make some assumptions based off of a 10-year analysis, because I don't see Nike not being here in 10 years. I think they'll be a larger and more profitable business. So let's predict where this business is going to go. With our revenue growth, we're going to go with some conservative numbers here. So we're going to go with 5.5, 6, and maybe 6.5 for revenue. Profit margin, we'll go, we'll go 8, 9, and 10. Actually, you know what? Let's go 9.5. Just hover around that 5-year and 10-year number. Free cash flow margin, we'll hover around the 8, 9, and then 10 range. And then price to free cash flow. Now, here's where it's going to probably get a little bit tricky here, folks. We're sitting at 31 for price to free cash flow and 33 PE ratio currently. So I'm going to go on my higher conservative side. I like to do 14, 16, 18. See where that might lead us. And then with a desired return of 13%, we're getting red across the board. So our average price calculated is $51, folks. So what that indicates to me is, while this company has a lot of great things going for it, and it's going green across the board, it is slightly overpriced. Now, granted, if you go back to this 2020 era, with these numbers here, yeah, you could have probably justified it a little bit. You had a little bit more of a margin of safety. But I believe this business is phenomenal. It's going to be around for a long time, and people are hopefully starting to think to be a little bit more healthier. Now that this pandemic's kind of coming to an end, people are going to be going back to the gyms a lot more, burn off that lovely pandemic weight that people have put on. But those are my thoughts on Nike. It's a great business. However, it needs to just fall down by a considerable amount. Now, I could be more aggressive with my assumptions, and I could, let's say, hypothetically, go with a 7% growth rate, 8 and 9. Unfortunately, it's still just going to bring this up to $63. Now, I could bring up, let's say if we put 10, 11, 12 for profit margin. Yeah, not much of a big change here, folks. It needs to just essentially fall in half. Once it falls in half, that's when I'd probably start looking at it and potentially open up a position. But I'm gonna definitely put it on a watch list, because honestly, I like the business. You're either thinking Nike or you're either thinking Adidas. Personally, I like Adidas a lot more, but it's hard to just ignore. You can't ignore the impact that Nike has brought forward to the world, from just a clothing perspective to fitness and all that other stuff. But yeah, those are my thoughts on Nike. That's the video. We'll see what the earnings have to report, but just based off what I see here, it needs to fall in half for me to even open up a position. But I like the fundamentals a lot. The financials are strong and it's growing. And that's it. Let me know what you think. Drop a comment down below if you agree with my evaluation. If you hold Nike, what are your plans? And yeah, just give me your thoughts. Love to hear from you. Anyways, thank you so much. I'll see you in the next video.